All right, let's talk a little bit more about this. Joining us right now for more on the impact of Senator Warren's tax plan on investing, let's bring in our guest, Grover Norquist, American for Tax Reform president. Also, Jared Bernstein, who's the Center on Budget and Policy Priorities senior fellow and a CNBC contributor. Jared, let's have you defend this, the idea that you could tax more than you've even earned on some of those investments.
Yeah, I think that's pretty tough to defend, actually. And I think that just like the arguments that if you cut investment taxes, you're going to get a big investment boom, we haven't seen that at all. In fact, investment has been uniquely weak in recent quarters, even after the Trump tax cuts on investment. On the other side of the coin, I'm not crazy about confiscatory tax rates at this level. But I think you're kind of missing the big picture here. I totally appreciate the reporting, and I think it needs to be done. But there's a lot of dissent, even within Democrats, about these levels of wealth taxation. I think what's happening here and what Senator Warren has done is open up a really important part of the debate about how you'd actually be able to tax wealth if a Democrat won, particularly if she won the Senate. I think a lot of the ideas you're hearing today just are too heavy a political lift, given who the marginal vote will be, even if Democrats control the Senate. So there's a set of other ideas to tax wealth. They include mark-to-market. I made a list. They include mark-to-market taxation, closing the step-up basis loophole, getting rid of the pass-through loophole, raising the capital gains rate, fixing the estate tax, and strengthening IRS tax collection. That's the real agenda that this wealth tax has generated, and I'm happy to debate any one of those. I can defend them all. I think it's harder to defend a tax rate that's over 100% on wealth.
Hey, Grover, let's get into this. How would you like to come after this? If Jared doesn't even want to defend this, maybe we move on from this point and just admit that it's difficult to come up with some idea of saying that somebody's going to have to pay more than they made on a trade in taxes if that happens. But let's just talk about mark-to-market. What's the problem with mark-to-market, aside from the fact that it seems like a nearly impossible thing to try and keep up with?
Look, the whole idea of this wealth tax is misdirection. She's talking about a 6% wage tax to pay for her Medicare for all, which she thinks somebody other than you, as the wage earner, will pay. She loves to have us talking about this, Swedish, 20 years ago, 30 years ago, Swedish, more than 100% tax rate. Sweden walked away from all of Elizabeth Warren's worldview, and they've done quite well by getting rid of their wealth tax and their death tax. They're doing well going away from Elizabeth Warren world. But this is to get you to not focus on the gasoline tax she wants, the energy tax, the carbon tax, which hits all middle-income Americans. All of the taxes she says she's going to hit rich people with destroy the value of your 401k and your IRA. 100 million 401ks, tens of millions of IRAs. Those are the people who are the collateral damage who get stepped on while she pretends to throw a punch, which we all agree isn't really going to happen, to rich people. She's going to tax the middle class, which is what Denmark and all of the European countries that have social welfare economies, they don't tax rich people much more than the United States. They gouge the middle class on higher income taxes and a value-added tax, which is simply a carbon tax on everything. She's trying to get you to not focus on her massive tax agenda on middle-income Americans.
Well,
and it won't work.
Let's say we both, it sounds like both of you agree with the idea that what she's proposing is not going to get passed. So, Grover, what about this idea that middle-class people will end up paying higher taxes under Elizabeth Warren?
She admitted it with her 6% wage tax, which she thinks somebody other than you will pay. That's a direct tax on middle-income people. The idea of taxing all energy is a gasoline tax on steroids, which hits your home heating oil as well as your gasoline, your car gasoline.
Jared?
So she has a massive tax hike on middle-income people.
That's all factually incorrect. I mean, interestingly, hold on. I didn't interrupt you, so please don't interrupt me. Interestingly, candidate Warren has bent herself into a tremendous pretzel in order to do exactly not what Grover was just talking about. And that's why this billionaire's tax, which was a 3% tax, became a 6% tax, because that's how she wants to pay partially for Medicare for all without hitting the middle class. And, that's kind of the the situation that Democrat candidates are in. They want to pay for their ideas, but they're not going to tax the middle class, so they're going to go after those at the top of the scale. Now, I happen to think that's a perfectly reasonable place to go because that's where so much of the pre-tax wealth has accumulated in this country.
But you also just said you don't think it's going to happen. I mean,
I don't
Jared,
think that's...
Do you feel a little
wait a second.
uncomfortable defending this?
I don't think that's going to happen. What I do think is going to happen, and I noticed Grover completely evaded the question, is some really interesting, compelling ideas that I think have legislative legs if Democrats win. Mark-to-market taxation is something we've really not done in this country, and it's one of the reasons why most of the income that billionaires makes goes untaxed. Now, I think, Becky, said we can't do it, we don't know how to do it. Actually, given the electronic transactions in securities trading...
Jared, mark-to-market seems crazy to me when you look at massive valuations that take place on a daily basis. Massive changes
it's
that
an
take
annual,
place.
so it's
and
an
the idea
annual
that you're
tax.
going to be paying taxes on money that you've never actually seen because you've never cashed in your shares seems crazy.
So it's an annual tax, and I agree with you that the valuation challenges are significant, but not for securities.
But you'd be paying taxes on money you might not ever actually make.
What about startups?
Yeah,
what about startups?
You
would destroy that.
It's money that you do make. In fact, that's the whole point. You're marking to market. So the market says...
But if you don't sell the shares...
you don't have the money.
You don't have the money, so you have to sell some of the shares to do it. And by the way, the stocks could go down next year, too. Like that, takes that into
the
account.
same thing happens with capital losses. So you take a loss.
They are playing us out. They are playing us out. If you don't have enough income to cover the capital losses, then that would just be money you pay.
Well, anyway, this is the debate that we ought to be having because I really think that's where the debate is going.
Is actually talking about. Anyway, gentlemen, we'll have you both back. This isn't going away anytime soon. Grover, Jared, thank you for your time.
Thank you.